Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. The global cues are fairly positive this morning. In fact, the GIFT Nifty is hinting at another dash at a record high. 21,750 was the level on the GIFT Nifty when I last checked, and looks like we are poised for another fresh high on the indices in the penultimate session of 2023. Of course, lots of stocks in focus as well, including the likes of Zomato, Canara Bank. We have a new listing as well. In the spate of listings or new listings that we have seen on the Lal Street this week, we have another one, Azad Engineering, that will be making its debut. We'll be talking about that. We'll be getting your big market voice on what to expect from the markets in 2024 and what are the sectors one should be keeping on their watch list for the new year. We'll also be getting all your stock related queries answered by our technical expert on the show. If you have any queries, of course, keep them coming on our live feed on YouTube and we'll try and take them up. But before we move any further, let's quickly take a look at the top headlines at this hour. Wall Street rally continues as the Dow notches a fresh closing high, while the S&P 500 is within kissing distance of record high. Headline indices are poised to clock in a 9th straight week of gains. Treasury yields, meanwhile, have cooled off as sentiment remains upbeat on hopes of an early rate cut by the US Federal Reserve. Asian markets trade largely higher, with Australian shares holding firm near two-year highs. The GIFT Nifty, as I mentioned, indicating a start above that 21,750 mark for the Indian market. Crude prices ease with the Brent back below $80 a barrel as investors continue to monitor developments in the Red Sea. Gold, meanwhile, hits a 3-week high on hopes of an impending rate cut by the US Federal Reserve. And among stocks to watch out for today, Canara Bank will be in focus as it gets ready to launch its mutual fund arm, Canara Robeco AMC's IPO. Also watch out for Zomato as it gets a GST tax notice of over 400 crore rupees. Meanwhile, Sachin Tendulkar-backed Azad Engineering gets set for its D Street debut today, and if grey market premium is anything to go by, we could expect a very strong listing and a premium of somewhere around 50% on the bourses. Well, as promised, let me get you the big market voice. First up on the show, joining me is Andrew Holland, CEO, Avendus Capital Public Market Alternate Strategies. Great to have you on the show, Andrew. As always, good to see you. Season's greetings to you. Hope you had a great Christmas and hope your plans for New Year's Eve are also ready. But before that, we got to talk about the markets, right? We have 2 more trading sessions to go. And, if you look at the setup globally, everything seems to be working. Wall Street knocking at fresh highs. You have US yields cooling off, dollar as well cooling off, chatter of early Fed rate cuts, and back home, things working for us as well on the macro front. So we have hit fresh highs here as well. But going forward, do you think the party is just getting started, given the fact that, foreign investors are yet to make a, big bang entry into the Indian markets?
Yeah, I mean, you've highlighted all the positive news, and it's been a great week. It's been a great month, for our markets, and I'm not sure the party's over just yet. But as we all know, that you asked me about New Year's Eve. The sobering impact of that is obviously the markets are open here on January the 1st. So I don't want to pour cold water on this great rally that we're having, and I can see that incremental news will be more positive going into the new year. But we we brought forward all of the good news that you mentioned, Nandita, particularly interest rate cuts in the US after the Fed pivot, and played it out in the past few weeks. So I think if anything, if we consolidate around here, I think wouldn't be a bad thing to do. I think looking for new highs every day is probably fraught with, I say, a pullback at some point, and I'll come back to that in a few minutes. But the big catch-up has been the large cap companies along with the banks, and I think that was the last leg of the push, for the index in the very short term. So I think that the party will continue, but I'm not sure as they go into go into the markets on January the 1st. It's a more sobering impact, I think, for January.
Right. So what is that one big risk you see to this leg of the rally? Would you say China could emerge as a threat? If the government there announces a big bang stimulus, could that once again emerge as a threat? Because otherwise everything else seems to be working in our favor.
Yes, no, Nandita, that's a very good point. I think China is probably a threat to flows rather than a threat to the Indian markets. If they did that big bang stimulus, which gets the confidence back towards the property sector, it's a very cheap market, and I think you see a lot of flows go from in emerging markets go towards China. I think where I'm looking at, Nandita, and you touched upon it in prior to talking to me, was this whole kind of problem around the Suez Canal and the kind of exchange of fire with Iraq as well. If that escalates further into the Middle East, particularly what's happening in Gaza, that could have supply disruptions plus oil price rising. So if that was the case, and then markets feel that, okay, inflation might not come down as quickly, then all those kind of expectation of rate cuts starts to get pushed out again. And the markets just could see a sharp correction because it's not baking in any negative at the moment.
You mentioned, of course, China's real estate sector that is, of course, struggling and how. But, back home, the picture is completely different because our realty sector, the realty sector in India, if you look at that sectorally, it is one of the top performers, 70% kind of an uptick on a YTD basis, right? PSUs, real estates, these have been the star performers this year. But going forward, you also mentioned that the last leg of the jigsaw puzzle, which was the banking sector, has started performing, right? So, do you think amid sector rotation, banks will steal the limelight in the new year from the usual culprits like real estate and auto?
Nandita, I think we will. Let's work on the basis that there's no problems that I mentioned. We'll probably remain in that overbought zone. But for the banking sector, if we're correct that the Fed will, let's say, reduce interest rates by 25 basis points in March, then the expectation would be that the RBI will follow quickly, maybe in April, with a similar kind of rate cut. So what that does for the banking sector is it takes that pressure off the kind of rush to get the deposits and paying a high price for doing that. So your NIMs start to improve. And of course, that confidence as you go into the election year, and with corporates thinking that the stability at the kind of general level in terms of politics, then you'll start to see the capex cycle for private companies start to pick up. So I think all of that bodes well then for the banks to continue to see the loan book kind of rise quite sharply. So that I think is the extra catalyst for the banking sector going forward, is lower interest rates.
Right, but anything in particular that you like among the large cap and private banking names like HDFC Bank, ICICI Bank? Any favorites there?
Yeah, I can't really kind of mention stocks, but you have mentioned the ones which, obviously would be the favourites. PSU banks, we kind of like. If we're going to have this big up move in the banking sector in the first quarter, then I think PSU banks will also do well. So that's, another part of the sector. But I think, Nandita, the themes that we talked about, many times last year, I think continue to play well for India, which is obviously defence spending, renewable spending, and then premiumization in the beverage industry, both alcohol and non-alcoholic. I think we're just at the beginning of the runway there in terms of growth, and the electronics manufacturing sector, I think, is going to be what we all talk about over the next 2 years as more and more of our local companies and foreign companies come in and take advantage of the government incentives, but also the huge growth potential that you can have both domestically and from exports.
Let's talk about some unloved sectors now, Andrew. Specialty chemicals, for instance, stocks haven't really been able to fire up. Earnings have been disappointing thus far. But, a section of the market believes that this particular sector could be or could emerge as a dark horse next year. Would you concur with that?
I'm not quite in that camp at the moment, to be honest. I think, it's nice to look at because it has underperformed. But I don't see the catalyst at the moment to be entering that sector. It's a bit like the IT sector, right? Why have we been more bullish on IT is because of lower interest rates in the US. It hasn't changed the outlook over the next 6 months for IT companies. The results are still going to be poor. And it's going to be a struggle for them for the next 2 quarters. But the expectation is it's going to get better, and that's what the market's banking on. I don't see that for chemicals at the moment.
Right. Of course, since you're talking about the IT sector, I want to draw your attention to Infosys. Of course, we've seen a large deal being cancelled just recently, right? $1.5 billion worth of deal that has been cancelled. Do you expect more such rude shocks, or do you think, that was just about a one-off? And since, of course, the rate easing cycle is just about to begin, of course, you are positive on this sector, but going forward, any more rude shocks one could expect?
Well, I mean, I'm not sure about rude shocks. I'm not sure that it was even baked into analyst, forecast. So I don't think it's a big disappointment in that respect. But I think for the IT sector, I think we've seen this catch up. I think it will continue to kind of do well in the very short term, unless the outlook for interest rates in the near term changes to being pushed out by a quarter or so. That would be a big negative, I think, for the IT companies in terms of sentiment. I'm not saying in terms of business, but certainly in terms of sentiment.
Right. Lastly, what would you have on your shopping list for the new year? I know you mentioned a lot of sectors, but any contrarian bet that you're taking going into next year?
I think the only other kind of sector that we've warmed up to over the last 2-3 months has been the metal sector. Again, I'm working on the basis here, Nandita, that the Chinese government will do something to shore up the property market, and I think that could be the kind of extra push commodity prices, particularly metals, would need to get the kind of pricing momentum there as well. But the other thing, Nandita, is that all the government capex that you've been seeing, and we see it every day when we travel around Mumbai, does have a multiplier effect across different industries as that comes to to finish as well. So I think across many different industries, you're going to see strong demand. As a multiplier effect of both government and private capex starts to feed through to the economy, and that's a big kicker for earnings. So that's why I'm optimistic, more constructive on the markets. But I do feel we're going to move into this overbought zone very, very quickly, and the risks, are just being overlooked at the moment, shall we say? But if you remember, I don't know how many weeks ago, when if you remember the small caps fell for. I'm not sure I remember the reasons, but that spooked the market a little bit. So it doesn't take much to shake confidence. That's what I would tell you as well.
All right, that's the view then. Andrew, I'm afraid that's about all the time that we have for this interaction. Thanks a lot for, taking out time and sharing your thoughts with us. Wishing you a very happy New Year in advance, and I hope to see you on the other side.
Yes, Nandita, Happy New Year, and Happy New Year to all your viewers. Thank you very much for the opportunity.
Thank you. Always a pleasure. Well, with that, let me also bring on board our technical expert for today. Joining me is Osho Krishan, who's the Senior Analyst, Technical and Derivative Research at Angel One. Great to have you on the show, Osho. Looking at the screen, 21,700 looks like a reality now, given the fact that the GIFT Nifty is hinting at a very strong start for our markets, right? But, given the fact that today is FNO expiry as well, and we are poised to clock the best FNO expiry for this year at least, so what are the levels on the upside or resistance levels that you'll be watching out for on the index? And is there any possibility that we could see 22,000 on the charts before we end the year?
Very good morning, Nandita. First of all, thank you for having me at your show. Well, yes, yesterday we have seen a very drastic breakout in the benchmark indices. Talking about the Nifty 50 index, the Nifty 50 have seen a very strong surge from the zone of 21,600. And now if we will be looking on the derivative front, then we are witnessing there has been a strong piling up of positions towards the zone of 22,000 call options. So that means now people are eyeing towards the zone of 22,000, but it's just a matter of time. We can obviously going to witness 22,000, but within these 2 days, it might be difficult because overall the markets are already at a very overbought positions, but undertone remains bullish. So from here onwards, one can definitely expect an higher targets of nearly 21,800, 21,900 on a very immediate basis. But additionally, I will like to highlight one of the point that India VIX has also seen a very strong spike. It has came towards the zone of 15.5. So that means the volatility is likely to be very high in current market. So we can expect that there can be both ways movement, because today is the expiry also for both the indices. So one can expect a very strong movement on either sides But overall, the undertone remains bullish as we have witnessed a breakout on both the key indices. For Nifty, immediately we are looking for 21,800 and now 21,500 and 600 should be acting as a support zone. While Bank Nifty has also given a very strong breakout in yesterday's session. So we are expecting that from here onwards, both PSUs and private sector banks both should be providing the thrust in the overall banking space, and it can also propel towards the zone of 48,500 on the immediate basis. That is the first target for today, followed by 48,800. So that is where we are expecting Bank Nifty to be in the coming 2 days.
All right, those are the levels to watch out for on the Nifty as well as the Nifty bank indices. But since you're talking about banks, Canara Bank is the stock of the day, given the fact that it has got the green light to, come out with an IPO for its MF arm. This will be the fifth listed MF, in India after HDFC AMC, NAM India, UTI AMC and ABSL, that's Aditya Birla Sun Life AMC. If you look at the particular stock, over the last 5 days, it has taken a bit of a breather, but last 6 months, it has had a fairly good run, in tandem with all the other PSU banks. So 45% kind of an up move coming in. But if one is looking to make an entry into some of these PSU banks, do you think Canara Bank warrants a look at the current juncture? Should one use this dip to buy into this?
Yes, actually, looking at the technical perspective, this is one of the pick from the technical point of view. From here onwards, we are expecting a very decent up move, because if we will be looking at the historical movement of Canara Bank, then it has been in the cycle of higher highs, higher lows, and also all the lows that has been taken care or taken support from either 21-day exponential moving average or 50-day exponential moving average. So currently it is hovering above 21-day exponential moving average. So the recent correction that we have witnessed from the zone of 455 odd zone, we are witnessing that from here onwards, one can expect a very strong up move again to retest the zone of 450, 455 in the near term. So with the positive news coming in, one can definitely try to accumulate this counter at the opening levels. 435, 436 is what we are expecting it to open. So from there onwards, one can expect a very decent up rally for the immediate zone of 450. Again, breaching 450, it has the potential to even go on the higher end. So one can definitely try to accumulate it either for short term or even from medium term perspective.
All right, that's the view on Canara Bank. But let's take up some viewer queries now that are trickling in this morning. Naveen wants to know your thoughts on an LIC. Of course, LIC shares have staged a very strong comeback over the last 1 month. And, yesterday it managed to hit a fresh 52-week high as well. So going forward, do you think the fortunes have been revived when it comes to LIC? Because, of course, there were concerns of lost market share versus private insurers, right? But at the current juncture, looks like, all those concerns have been put to rest. So on the charts, higher highs, do you think it's a breakout stock and one could perhaps look to book some profits off the table?
From here onwards, I am expecting a very strong up move in this counter, because looking at the overall formation which it has made in the last 2 months, it is forming a very strong pattern of flag. So from here onwards, the breakout, if it sustains above the zone of 820, which was the closer of yesterday's session, so any sustainable buying above the zone of 820 will be providing a strong thrust in this counter. And from medium term perspective, one can definitely look for a higher target of nearly 200 odd points. So I am eyeing for 1000 zone for LIC insurance, and for short term perspective also 860 to 870 is the first resistance that one can see for a very short term perspective. But from medium term perspective, one should definitely accumulate this counter for the target of 1000.
All right, target of 1000 LIC. Hope that answers your query. The next one is coming in from Raja Pasala, and he wants to know your thoughts on an IEX. He wants to know if there's any chance of an upward movement here, and he wants to know the short-term target price on this particular counter. The stock hasn't gone anywhere, really, Osho. Last 1 month, it is just about up 6% or thereabouts, and hasn't done much on a 5-day basis as well. Would you expect any bit of an up move on this particular stock? What are the charts suggesting now?
Overall, this counter have seen some kind of reversal on the daily platform, but looking at the overall resistance zone, it is still hovering below the strong resistance of 160. So until it breaches the zone of 160 on a decisive manner, and I mean on a on a closer basis, then from here onwards also one can expect some kind of correction or cool off for the timing. But once it breaches the zone of 160, we can expect a gradual up move. We are not very much aggressive for the targets in IEX, but obviously one can keep this in their watch list. Once it breaches the zone of 160.65 on the higher end, then one can definitely accumulate for a slow and steady up move towards the zone of 185 followed by 200 levels.
Right, that's the view on an IEX. Hope that answers your query. The next one is coming in from Charan, wants to know your thoughts on HUL. FMCG as a pocket hasn't had a good run. All that enthusing vis-a-vis other sectors, and HUL has been particularly sideways. Hasn't done much over the last 1 month. And even if you look at the YTD charts, it's just about up 2% or thereabouts. So for the next year, do you think HUL looks like a good bet? Of course, there are fundamental reasons as to, the government spending could go up, rural demand may recover. But on the charts, are the signals looking positive, or do you think it's going to be sideways at best?
See, overall, HUL being a very low beta counter, so we are not very much aggressive for the higher targets. But looking at the overall technical perspective, this counter is likely to hover within a range. The higher end is near about 2700, and on the lower front, we are witnessing a very strong towards the zone of 2400. So we are expecting that it should remain within the range, and one should try to have their trading approach as per the ranges. Once it breaches the zone of 2700 on the higher end, then from there onwards, one can expect a decent up move of, let's say, 300 odd points towards the zone of 3000. But as of now, 2700, 2720 is the zone where one should try to book their profits for short term. But obviously, if one is carrying the position for a longer term perspective, then HUL being a low beta counter, it might not give you that much of ROI, but obviously will stabilize your portfolios even in the volatile market conditions. So HUL is a counter which I basically prefer to everyone to have it in their portfolios. It is one of the safest counter that you can have with a very decent kind of a return that you can expect on a yearly basis.
All right, that's the view on HUL, a safe stock to have in your portfolio with a slightly longer term perspective. Let's take up a query then on Nazara Tech. Raj wants to know your thoughts on how the charts of Nazara Tech are looking at the current juncture. Of course, gaming companies have had a fairly turbulent year, so to say. But going forward, Nazara worth a look now?
Definitely. If I'll be taking a technical bet on Nazara, then from here onwards, I am expecting nearly a 100 point of higher end. That means 950 to 980 is the target that I am expecting in Nazara. Looking at the overall technical setup, a breach above the zone of 880, 890 on a weekly closer will give a boost to this counter, and one can definitely look for a target of 960 to 980 for short-term perspective. Overall, the counter is still hovering in a sideways manner, but once it gives a very decisive breakout, then from there onwards, one can definitely try to gauge the momentum for a decent upside target.
All right, that's the view on Nazara. Our last query really for the day, Suson Energy. A couple of people have written in, want to know your thoughts. Sampath, as well as we had another person sending in a query on a Suzlon. Given the kind of multi-bagger returns that the stock has given, would you advise investors, or would you say that there is a lot more upside left? Should one buy now, or do you think it's overbought?
See, overall, on technical perspective, yes, this counter has given a very strong whooping returns of nearly 5 times or even higher than that. But overall, now after giving that much of returns, it is concluded that one should wait for some kind of time-wise or price-wise correction in the counter. So overall, this counter has entered the price-wise correction phase. But on the technical specific front, 30 is the zone, 30 to 32. 30 to 32 is the zone where one can expect some kind of consolidation or support, and once it gives a very strong resurgence from those ends, then one can try to accumulate. But at current price, if one does not have it, then one should not take a fresh position in Suzlon. But if those who have holding the position, they should definitely keep with a stop loss of 30.
All right, that's the view then. But just about one last query then. This one is on Aarti Industries. It has come in from Vijay Chundru, and Debu K has also written in on the same counter. Of course, it has bagged a new contract yesterday. Going forward, Aarti Industries, how is it looking on the charts now?
See, overall, Aarti Industry has given a very strong up move once it has given a breakout from the zone of 520. So now it has already surged over 20% from the breakout zone. But overall, the chemical counters are looking very positive. So there is some kind of momentum that is still left in this counter, but it is at a very overbought position. So one should not be very much aggressive. Wait for some kind of correction towards the zone of 600, 610. If there will be any kind of correction, then it will be providing you ample amount of opportunity for a higher target of 665 to 680 on immediate basis.
All right, that's the view on Aarti Industries. But with that, we've come to the end of the query segment, Osho. But before I let you go, what would you be recommending for our viewers this morning?
First of all, as you have mentioned, my first technical pick is from the Canara banking counter, that is Canara Bank. And I'm expecting a very strong upside movement in Canara Bank in today's session. So first technical pick will be Can Bank. One should definitely try to accumulate it within the zone of 430 to 435, or keeping a strict stop loss of 418, which is a very strong support zone. And we are expecting it to get withheld in the coming future. On the higher end, 450 is the immediate target. And even after that, it has the potential to reach on the higher fronts. So first is Can Bank. Second is Exide Industries. Exide Industries from the past 3 days have seen a very gradual up move, but that has definitely attracted some buying traction or the volumes. So from here onwards, one can expect a decent up move towards the zone of 315. So one can definitely try to accumulate Exide Industry, keeping a stop loss of 292. And the last technical pick is again from the buying for the buying side. It is from IT space. CESC is looking very positive. CESC, looking at the recent development, it has gained strongly from the zone of 115, 118 odd levels. So one should definitely try to accumulate it for a target of 136, keeping a strict stop loss of 118.
All right, those were the recommendations coming in from Osho this morning. With that, Osho, thanks a lot for taking out time and joining in and sharing your thoughts. Here's wishing you a very happy New Year in advance, and hope to touch base with you in the New Year sometime.
Happy New Year, Nandita, and all the viewers of Money Control.
Thanks a lot. Thanks a lot for joining in. Always a pleasure chatting with you. But with that, we've come to the end of this edition of Morning Trade. But before I go, here's a reminder for viewers. New listing today, Sachin Tendulkar-backed Azad Engineering, and the listing is expected to be strong. Grey market premium, of somewhere around 50%. That is the kind of listing that we could expect for this one. So let's see. 10 a.m. is when we'll get to know how this new listing really pans out. But completely timed out on this edition of Morning Trade. Thanks a lot for tuning in from me and the entire team. Of course, coming up next is opening bell, so don't go anywhere.